Thank you, David, for that introduction, and good morning to all of you in the room, and hello and good morning for those of you who are on virtually. I know that we all yearn for some semblance of normalcy to return, and it will. I have the distinct privilege this morning to speak to you about Ares' newest vertical, secondary solutions. The Landmark acquisition places Ares very much into the leadership position of a very fast-growing secondary market. We've known Ares for quite some time. We've known some of the people. We're familiar with its collaborative culture and its record of driving returns. When we were looking for a partner, we had a variety of suitors. There were many, many interested parties. Our decision was not economic. Our decision was not economic. As you all know Mike, he drives a very, very hard bargain. Our decision, culture won out. Culture won. We were very impressed with the similarity of our culture. Similarity of our culture. The fact that both of our cultures believed in people, believed in collaboration, but importantly, doing the absolute right thing for our investors, doing the right thing for public shareholders, and doing the right thing for people. So it was an easy choice for us. We very much are excited about the opportunity going forward, and in a very few short months, we've already begun to experience the awesome power of the platform. We could not be more excited about the expected growth and the opportunity ahead. Landmark has about $20 billion in AUM and is one of the most experienced secondary investors. That's all we do, secondaries. And over the next several minutes, I will outline the significant growth that's in front of us. And importantly, I want you to remember this. The secondary business is at an inflection point with rapid growth occurring. And we, as part of Ares, look forward to capturing that growth and accelerating the overall growth for the firm. Landmark has been a pioneer in secondary solutions for almost 30 years. We do that across 3 asset classes with very dedicated, discrete teams who focus on, number one, our first was private equity. Landmark really started as a venture firm. We started as a venture firm, and in the late 80s, we were looking to raise a successor fund. We came across a very large investor who had been an investor with us. They were not interested in investing in our successor funds. This was in the late 80s, .com. They said, thanks, but no thanks. And on the way back to the office, my partners said to themselves, well, hell, if they're not buyers, perhaps they're sellers. That, my friends, was very much of a novel thought back then. We came back, organized, went back to them and said, we'll buy it. And today, we are in the process of final deployment of our 16th private equity secondary vehicle. There's a theme that you're going to feel as you go through the next one. In 1996, we were raising our 5th private equity secondary vehicle. We went to an investor who had been invested in that vehicle. That investor had no desire to talk to us about private equity and kept complaining about their real estate portfolio. In fact, what they wanted to do was to liquidate that and redeploy that capital into REITs. We thought about it. We went back to our office and said, same dynamics, same motivation. There's a business here. We organized the team, and we did that, interestingly enough, by not simply rebadging private equity investment professionals who may have bought a house or two, and now they're real estate experts. What we did, we went out and we hired folks who had structured real estate, underwritten real estate, financed real estate, and today we are market leader in real estate secondaries, and we're in the process of the final deployment of our 8th real estate vehicle. In 2015, and this theme keeps coming, in 2015, we had 2 investors, large investors who had been in our other vehicles, come to us and said, look, we're interested in doing infrastructure. Do you ever see it? Do you ever see that stuff? My response was, absolutely we do. Because infrastructure, real assets, ends up residing either in a private equity portfolio, or they're in a special opportunity portfolio, or they're in a private equity or real estate portfolio. And the response was, yes, we do see them, but these are valuable assets that fall to the factory floor. These 2 investors said, well, don't let it fall to the factory floor anymore. 2 separate accounts, $500 million, it put us in the infrastructure business. We have just completed recently the final close of a commingled infrastructure vehicle that's just shy of $1 billion. Common theme is that being a trusted advisor, being a thought partner, generates product and it generates opportunity. We have never taken the view that with product development, that it's build it and they will come. It's really about being close enough to your investors so they share with you what it is challenging them, and then using that as the opportunity.